Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, August the 21st. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can then implement into your portfolios, but please do that in your own way. And past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data across the pond. Not a whole lot to see here. I talked about this yesterday. Not a whole lot of data coming out to really go on. Next stop is tomorrow, obviously, and we do start getting some good economic data in the form of existing home sales, oil inventories, and then later on, say Thursday, we're going to start getting the flash manufacturing and services PMIs out of the European region. Remember that PMI number, Purchasing Managers Index, on the flash side is the one that is most important for Europe, not so much here in the United States. We look at ISM. But that all coming later on in the week. Monday and Tuesday, obviously, really slow days for economic data. All right, so let's talk about the overall markets. We've got crude oil slightly pushing higher right now above the 38.2 Fibonacci level. At least I believe it is there. Yeah, it looks like it's above that level. Just slightly, maybe just tagging right on it. Toggling back and forth, let's say, right now. That's going to be an important number. Let's call it 68.17-ish, 68.15 area. Getting above that, settling above that Fibonacci of 38.2 Fibonacci extension, that is going to be pretty important. I think the market's going to want to migrate back down towards this point of control, but I really don't see it going outside from 70 to below really 63 or 64 area. So that's where I think we're going to start seeing it kind of bounce back and forth. You know, it's really going to be dependent on tomorrow's economic data too. So expecting a drawdown, but last month we had almost a build of 9 million barrels over what was expected. So that was the catalyst to really cause this market to roll over. All right, gold looking a little toppy here. I was thinking we were going to get more of a bounce higher. It's kind of looking a little toppy. I'm hoping that this will act as support here because remember I put on that GLD trade yesterday to the upside, sold some puts in there, so definitely don't want to see this continue down. I thought it was looking like it was a little overdone. Today's market action not making me feel too comfortable with that trade necessarily. Bitcoin, I haven't done anything, nothing to see here. The market is seems to be just having a slow death. Bonds starting to get a little bit of pullback here. I talked about this. You know, it's a flight to safety. It's, you know, sometimes you just have to put money where you know you're going to lose a little bit, but you know you're going to lose less than you would otherwise somewhere else. So I think that that's really the driver of this bond market, is that it's a safe haven for cash. They probably at this point don't really care that they lose on the price of their bond as interest rates increase. They're just looking for a guaranteed return on that money, which is what the bonds or that type of instrument offers. All right, so VIX still slightly down ticking. We're not in the teens. We're still in double digits. We're still 12, very close to it. But as the markets push higher, we would expect that to come off. And with the Dow Jones up 111 points, that's a catalyst to cause VIX to come off, right? And yesterday we did settle above this 38 fib level that I talked about and above the value area high. That's a pretty major resistance area. Now that we're above that, it's kind of like a green light for the bulls at this point, because that's going to be a major support area on the way back down if it were to come down and try and test that. Now, NASDAQ pushing higher up against the 61 Fibonacci extension. I talked about it. The NASDAQ and the E-mini S&Ps, as the charts have been showing, are lagging the Dow Jones Industrial Average today. NASDAQ needs to get above this, let's call it 7450 area, needs to settle above 7450 in order for the bulls to really feel like they've accomplished something here on this push higher. A settlement below that, bears are still going to feel like they're in control. All right, this is the E-mini S&Ps. Again, similar situation where it really wants to get above this 61 Fibonacci extension. Everything lining up with the NASDAQ and the E-mini S&Ps. The Dow's already achieved those levels. This is going to be a bigger hurdle for the E-mini S&Ps right now. It'll act as like a tweezer top, and as we saw on this extension here. So that is going to be something the bulls are really going to try and push through. Let's look at the E-mini S&Ps on the daily chart. You can see overnight inventory didn't really get flushed out. Maybe a little bit. They gave it the old college try, but at the end of the day, we are continuing to push higher now. It was a weak flush out, if anything. All right, so let's talk about some trades that I put on. Costco's looking like it's getting a little toppy here towards the upper end of this Fibonacci extension. Remember, this was the old Fibonacci. I added the extensions off of the retracement there to give us this extension, and we are piercing above that right now. That was a big resistance. We saw that yesterday. It couldn't get through there. Today we popped through, but now we're coming back down off of that, and it's just looking like almost like a shooting star here with Costco, which is a very bearish pattern. If we can get confirmation for tomorrow, I got in a little bit early and I bought the October 220 puts in there for $3.30. I did that really small. It's really to stay active in the markets. It has 0 IV percent, which means it's at the lowest level of the last 52 weeks. And that being said, we would expect volatility to start expanding in there, and that will help out my directionality as well. So if I'm directionally wrong and volatility expands, to be more clear, volatility expands and I'm directionally wrong, that will help me, is what I'm trying to say there. So when we're buying this option at very low volatility, we're not only going for directionality, we're kind of doing a vol play here as well. So volatility expansion would be nice for me in Costco. Now, Tesla, I haven't added anything to this. I kind of missed my trade. I still have a trade working in here, and I'm just trying to add to my September 390 calls in there that I sold yesterday on that move. Today we got a bit of a higher move. I thought I'd add just a little bit to it. I did a full tranche last time. I'm looking at a half tranche this time. So scaling in a little bit with this move higher. I think that it's overdone, and we'll see a little bit of a rollover coming. So still have some working orders in there for trying to get into some more Tesla with this high implied volatility. It should help me out, right? There should be an opportunity anyway. And that's about it. Check out the webinar on Thursday. It is going to be on the straddle with no upside risk. I'm going to show you how to build that bad boy out in the webinar according to my rules. Yes, you can go online and figure it out, but I have specific rules in and around everything, down to short calls, long calls, short puts, everything. So find out all of my rules to increase your probabilities of success by attending these webinars, and check out some of my older ones. They're still evergreen, and you will be able to have a lot of takeaways from there as well. All right, that's about it. Other than, if you can't take that, take it easy.